Hi everyone, welcome back to the channel. Today we're diving into the Australian property market update for 2025. Is it going to be another record-breaking year? Are we looking at a potential bubble? Rising property prices, rental market craziness, and all the good stuff in between. Let's get started. All right, let's talk about everyone's favourite topic, property prices. In February 2025, Australia's median dwelling price saw a 0.4% increase. Over the past year, national property prices have jumped a whopping 7.8%. And this is despite those high interest rates everyone's been talking about. Think back to pre-COVID times in 2020. House prices are now a solid 30% higher. Why? Limited supply and a huge wave of migration driving up demand. It's a recipe for some serious price action. Now, you might be wondering, if demand is so high, why isn't anyone building more houses? Well, the good news is that construction is actually ramping up. In January 2025, total dwelling approvals shot up by 6.3% compared to the previous month, with a total of 16,579 new approvals. Apartments are leading the charge, seeing a massive 12.7% surge in approvals and making up a solid 42% of all approvals. The value of residential buildings approved just hit a record-breaking $9.04 billion. Investors are betting big on the future of Australian housing. Now, let's talk about the elephant in the room: interest rates. The Reserve Bank of Australia cut the cash rate by 0.25% in February 2025, bringing it down to 4.10%. This is huge news because it's the first reduction we've seen in 4 years. So what does this mean for you? More borrowing power. We're talking a potential increase of 5 to 8% in borrowing capacity for homebuyers. Historically, rate cuts have been like rocket fuel for property booms. Experts are predicting another price surge of 7 to 10% in 2025, especially if we see more rate cuts on the horizon. So buckle up, because the property market is heating up once again. Let's be real, guys. Australia's always been a hotspot for luxury real estate. But here's the thing. Sydney's gone full-on global elite. We're talking top 3 in the world for expensive luxury homes, right up there with Paris and Tokyo. For a cool $1 million, you can snag a tiny 43 square metre apartment in Sydney. Compare that to New York City, where the same price gets you 32 square metres or a measly 19 square metres in Monaco. So yeah, Sydney's up there. But hold on, it's not all about Sydney. If you're looking for luxury on a budget, well, relatively speaking, the Gold Coast is where it's at. For that same $1 million, you're looking at a spacious 119 square metre pad. And let's not forget Melbourne, another hotspot for high-end real estate. Now let's shift gears and talk about some up-and-coming suburbs. These are the areas that are on track to hit that coveted $1 million median price tag. First up, we have Kumbaba on the Gold Coast, sitting pretty at $930,000. Right behind it is Upper Coomera, also on the Gold Coast, at $965,000. And last but not least, we have Redland Bay in Brisbane, with a median price of $985,000. Just 20 years ago, these suburbs were considered affordable, with median prices hovering around the $250,000 to $350,000 mark. While rising property prices might be great news for some, they're also creating a serious housing affordability crisis. Since 1975, Australian house prices have gone up a mind-blowing 3,435%. Meanwhile, full-time wages, they've only increased by 1,183%. This massive gap between income and house prices has put a huge strain on everyday Australians. The average mortgage repayment now eats up a staggering 40 to 50% of household income. Back in the 1990s, that figure was more like 25 to 30%. Sydney and Melbourne are now competing for the title of least affordable cities globally. We're talking even worse than London or Los Angeles for median income earners. It's a tough pill to swallow. Let's move on to the rental market, which is a whole other beast. The national median rent has now hit $570 per week, with houses averaging 582 and units at 540. But those are just averages. In reality, it's a bloodbath out there. Rental vacancy rates are hovering below 1% across major cities, creating fierce competition for any available property. Landlords are basically in the driver's seat. Sydney and Melbourne, in particular, have seen rents skyrocket by a jaw-dropping 14% in just 12 months. Brisbane and Perth are experiencing a full-blown rental boom, with median rents hitting $660 and $650 per week, respectively. Vacancy rates there are practically non-existent, dipping below 0.5%. Amidst all this real estate chaos, there's one sector that's quietly booming: student accommodation. Over the past decade, this sector has practically doubled in size, with a whopping 132,000 beds now available across the country. Investors are taking notice. Occupancy rates are through the roof, sitting at a cool 80 to 95%. Rental yields are incredibly attractive, ranging from 6 to 8%. That's significantly higher than the standard 3 to 4% return you'd expect from traditional residential properties. The driving force behind this boom? The ever-growing demand from international students. Universities are expanding their facilities to accommodate this influx, creating a golden opportunity for investors. So there you have it, guys. A snapshot of the Australian property market in 2025. It's a wild ride of soaring prices, tight rental markets, and emerging opportunities. Whether you're a seasoned investor or just starting, it's crucial to stay informed and make smart decisions. Remember, knowledge is power in this game. If you found this deep dive helpful, hit that like button and subscribe to the channel for more real estate insights. Thanks for watching, and I'll catch you in the next one.